It is Monday, the 14th of July, 2025. It is French Independence Day. So, joyeux 14 juillet, as we say in French. Happy 14th of July. Yes, so what is happening? Well, you may have noticed in the world of Bitcoin that this week has seen Bitcoin go to higher all-time highs and also mean revert to on lower time frames to various RMLRs, to various means, and continues to do so even now, even as Bitcoin hit and crushed the $123,000 mark and then came back down. Lower time frames proceeded to mean revert right to the 1110 RMLR and then the 3012 RMLR. And last I looked at it, was moving back up a little bit, but generally was going down on the 15-minute, but still finding a little bit of buy pressure there. If you look at the RMLR, if you look at the VRE levels and the normal and Laplace distribution levels, you'll see it's basically been moving along through the levels very nicely. That said, don't just think that because it went up very nicely that we're going straight to 150K now with no pullbacks. No. There's always distribution and mean reversion, and either of those things can go up, down, or sideways. And you need to know how to read the information to know which way it's likely to go. So even if you think for some reason that your favorite YouTube Jimmy has told you, hey, it's going to 150K, and you believe it for some reason, without any actual information that tells you that's specifically a target. I mean, yes, there are targets at that level. There are targets higher than that level. But why would you specifically pick that level, like on the weekly or whatever time frame you're looking at, right? It's because it's a round number and you're thinking in round numbers, right? And you're following some person who knows nothing about actually trading. And you just want to do something that sounds easy. So you're hoping to put in a long, if you haven't already, and you're hoping to just hold it and take profits when it gets to 150K, right? Or even hold it longer, right? Well, assets don't move in straight lines. They are constantly zigzagging because that's what assets do. They distribute and they mean revert. And they do that based on the mean of returns. So they distribute away from the mean of returns and they mean revert to the mean of returns. That's what assets do. Price just follows that. And that's why price also zigzags around the mean of returns. Or you could say the mean of price if you want, but it's not the mean of price that determines anything. The mean of price is just a mathematical average of where the price is. It doesn't actually tell you anything about where it's likely to go in the sense of by itself. Now, there are some things you can tell based on price. For example, there is some leading information that you can tell based on price. I'm not going to get too into that, but if you know, you know. If you're part of the alpha trading community, you know specifically of an indicator that alpha trading created that did not exist before, as far as we know anywhere. And it does, in fact, use something to do with the price to tell you something about the future, but it is not telling you specific price targets based on past price actions. Okay, it's telling you something very different, something still very useful, and it's helpful for determining targets and knowing when you're in a distribution or a mean reversion? And what are your take profit or stop loss targets? By stop loss, I don't mean automated stop loss. I mean, you know, your get out targets, right? In case you happen to be on the wrong side of the trade, right? Because generally speaking, you don't want to be in trades when you're on the wrong side of one. You want to get out as quickly as you can. So I got a bit more to say, but I'm going to have to do a bit of a pause here for a minute or two. So I will be right back with you guys if you will bear with me. If not, well, that's okay. See you guys soon. Just going to mute this for a minute or two. Okay. All right. So, all right. So I'm back with you guys. Just a little bit of a pit stop I had to make there along the way. And I just wanted to get back to this discussion here real quick, because now that you know that Bitcoin has hit 123, okay, 123, a nice number also, but again, really random in the sense of, you know, prices are moot, right? You want to be in the right direction of the trade. That's all that matters. You should not care which way the price is or what the price is. It's completely moot. And you can think to yourself, what are you talking about? At 123K, how is that moot compared to when it was like 1/10 of that? Well, all it means is you need to spend 10 times as much to get the same amount as when it was 1/10 the price. That's the only difference. It doesn't mean you can't trade it. So if you had $500 to trade when it was 10th the price, and you still only have $500 to trade, now there's 10 times the price, you still have $500 worth that you can buy. And yes, you can buy $500 worth of an asset that's worth $123,000 because you can buy fractions of an asset, right? When you go onto a trading exchange, you can buy and sell fractions of an asset. In the case of Bitcoin, one Bitcoin is made up of 100 million Satoshis, which I'm sure you know if you watch my channel and you know about Bitcoin. But if you didn't know, well, now you do. There are 100 million Satoshis, just like there's 100 pennies in a dollar or 100 cents in a dollar. In Bitcoin, they're counted in Satoshis, and there are 100 million Satoshis for every one Bitcoin. So if you have one Bitcoin, you have 100 million Satoshis. If you have 1% of one Bitcoin, you have 1 million Satoshis. If you have 1/1000th of a Bitcoin, right, or 0.01 or 0.1% rather of a Bitcoin, right, then you have, anybody want to guess? What's a million divided by 10? Yeah, you have 100,000 Satoshis, right? And right now, 0.01 Bitcoins is roughly $123, $1,230, right? Or $1,220, whatever the number is. It's 1% of 123 or 122,000, wherever the price is at right now. By the way, there are still mean reversions happening. For example, on the 4-hour to the 3012 RMLR, which the last I looked was around somewhere between 115 and 119,000. I think it's up to 119,000, or it will be at some point today. I think when the 8 a.m. U.S. Eastern Time candle begins, then on that 4-hour candle, it'll be around, I think, 119K. So if it does mean revert there and find support there, that's great, because it's not a significant, massive dip or anything, but it's a nice enough dip to certainly grab some more if it looks like it's going to turn back up again. But does it have to turn back up? Well, look at the weekly time frame. Look at the 5-day time frame. Look at the daily time frame. There's all kinds of interesting time frames you can look at to see where might be good entries and exits. Certainly on the weekly time frame, as I saw it a bit earlier today, there was definitely some very nice looking information looking to the upside for now. But I say for now because, of course, it can turn around on lower time frames. But like last week, the probability is still generally to the upside. However, there are some indications that are saying, well, this is probably going to go a little bit south by the end of the week. And that shouldn't surprise you at all if it does. As prices, again, can always go up, down, or sideways, because they're just following the mean of returns. And they're just following the returns, right, and the correlation. And that's what we're seeing happening right now on Bitcoin, right? We're seeing the asset just doing what the VEPS tells you it's doing and what it's about to do with very high accuracy rates. But just because it's highly accurate does not mean that you should just go overboard and just pile on the leverage and try to swing trade that. Right? The honey badger loves to pull fast ones on traders who over leverage themselves. The market loves to take the liquidity of traders who over leverage themselves, and especially those who then try to swing trade the beast. That is generally a very risky proposition that no cautious trader could reasonably and wisely recommend doing. And when I say cautious trader, I don't mean overly cautious, because obviously there is always risk in trading. And it doesn't mean you can never use any leverage. Of course you can use leverage if you know what you're doing. Do you need to use leverage? It really depends on your position and your position size. If you want to use leverage, that's a different story. Like, can you use leverage? Yes, you can use leverage if you know what you're doing. But most people don't know what they're doing, and therefore they should not use it. And my guess is you probably don't know what you're doing with it. If you're a trader in the retail space that doesn't know about trading properly using the VEPS and how to manage your risk properly. Because this really all comes down to that. If you don't have any risk management, nothing else matters in trading, right? Nothing else. If you are not managing your risk properly, you will not be a consistently profitable trader. It doesn't matter what system you use to trade, right? If you're risking too much on the line, it's going to come back and bite you in the backside, whether you like it or not, whether you want to admit it yourself or not. It's just how it happens. So, on that note, what can I tell you? Don't get caught trying to do the impossible with too much leverage and trying to swing trade literally the most volatile asset in the history of market traded assets. Right? It is delivered now. I mean, I haven't even done the calculation, but if it did more than 18 billion when it was at the previous highs of 100 and whatever it was, 12K. Now it's gone up another 12, 13K. It's definitely gone up more than 20 billion% from when it was at zero until now. So if you think that's not a volatile asset when it's actually the most volatile asset on earth, well, there you go. Good luck to you and happy trading. Peace.